Hey everybody, today is Friday the 28th of January 2011 and wanted to give you guys a market update here. As you know, I was traveling today and looks like I missed a pretty interesting day. Not sure that I would have really taken advantage of the short side here to the degree that it would have made a significant difference though, but hope you guys had a good day of trading. Obviously, you know, the market was down a couple percent here today, and you know, it's the first real sell-off we've seen in a while, and it's brought out upon us by, you know, maybe some earnings news and some obviously world developments as well with what's going on in Egypt. This is the first day we've seen the market close below the 20-day moving average since December 1st. And we're still positive for the year, and technically we still have an uptrend as this low hasn't been violated here. But obviously when you get that big of a sell-off, it shows that there was, you know, maybe this was an excuse for selling. Whatever you want to call it is really irrelevant, because if you were long today and you stayed long, then you got hurt. And we need to assess the damage and see what it means going forward. So when we take a look, let's look at this 65-minute time frame here. You can see we came down to this trend line as well, and we're kind of holding in this area. I think I said earlier in the week, and I've been talking about this 127 level. If 127 is broken, then we have to really take a closer look at whether this market might be in for a bigger decline, perhaps down towards that 50-day moving average. But 127 will be important early next week, and you know, it's possible we get some follow through to the downside. But you know, what happens in Egypt might be a catalyst for bigger things here. We have to take it seriously, like I said. So when you look at the 1 minute time frame, we were briefly above VWAP here this morning. And then we just kind of caved down through the 2-day volume weighted average price, paused a little bit of daily S2, but really there was just a real nice consistent pattern here from a day trading perspective of lower highs and lower lows, and there was just no reason to be a buyer when we have a declining volume weighted average price. So we have a declining volume weighted average price throughout the day. It began to stabilize here late in the day, but that's not a reason to buy either. It's not a reason to buy at a 5-day moving average, at a 10-day moving average, at a 20-day moving average. Those are areas to look to see if the market is gaining support, and right now it's not doing that. So the market obviously finished lower on the day. The NASDAQ got hit a little bit harder too. We did undercut these lows from a week and a half ago, but you know, these markets may be just correcting through, setting up for a correction through time in here as well. Right now the NASDAQ is within this little band of you know, horizontal support and resistance, and the bigger level here is this basically $55.50 level. If we break that, maybe we get a little bit further selling. We'll see, but man, I don't like using this mouse on my laptop. I should have brought a plug-in one. Anyways, you know, we closed below the 20-day moving average on the NASDAQ as well. Maybe we see further selling down to the 50-day moving average and this prior resistance, which is pretty close by at 55. So I don't think we're going to see a smash from here. Technically, we are still in an uptrend. Hate to disappoint anyone who's bearish there, but we are still in an uptrend. This is a shock within that uptrend, and again, on heavy volume, and that tells us we have to look at it and say perhaps the easy money has been made on this rally, and now we're going to correct more through time or price, but we have to be prepared for movement in either direction. And I posted those charts this morning that showed some potential long and short candidates, which we'll talk about here in a moment. But you know, it might be the beginning of a bigger change in trend, but right now it's not the right idea to run out and call a top. There will be a lot of that, I'm sure, that you see over the weekend here, but technically we're still in an uptrend. We got our first, you know, shot across the bow. Maybe it leads to something bigger. We'll see. Russell 2000, as we know, has been the weaker market. Now we have a pattern in here of a lower high, and possibly we're going to see a lower low. But with a rising 50-day moving average, it's unlikely but not impossible that this turns into something bigger. So this 50-day moving average, and maybe just a little bit below, down towards let's just say 76.50-ish area, will be important for us to hold, I think, moving forward. Otherwise, this is just, the markets don't go, a consistently profitable trader won't typically go from all-out bullish to all-out bearish. Now, if you're just trading on a daily basis, on an intraday time frame, the appropriate thing, we were in a horrible bear market today, but when you put it in the context of a bigger weekly time frame, we're still in an uptrend, and we will see if this prior resistance level perhaps gets tested and holds the support down at that 76-ish area. So there's reasons for concern. There's reasons to say, as we talked about this a couple weeks ago, that when we started coming into the earnings season, that it appeared as though late last year and early this year, the mantra was the risk trade is on. Well, now the risk trade is turned more to a cautious trade, not an outright bearish trade. There will be individual opportunities on the bearish side, but you want to stick to the stocks that are in downtrends. You want to pick on the weak candidate. You want to pick on the easy target. The little kid in the corner who wears glasses. Don't go try to punch the biggest guy in the schoolyard. Go where it's easier. It's a horrible analogy here, but that's the way I view the market: is pick on the weak stocks, not trying to pick the top in Google or Apple. To me, Google is showing a little bit of reason for concern that maybe it stopped going up for a while, and Apple maybe it stopped going up for a while, but they're still in uptrends until we break bigger levels in Apple. It's down at the 325 level and that 50-day moving average. Until it does that, this isn't the type of stock you want to sell short and pick on. You don't want to pick on the semiconductors. They're still in an uptrend. They're very extended. They've made a tremendous move to the upside here, and now it's time to become a little bit more cautious. But even here, on this 65-minute time frame, you look at some of the more significant levels. We're still holding. Here we've got this. Even right here, we're on a 10-day moving average, or above the 10-day moving average right now, and at the 5-day. So, not much damage done in the semiconductors. I wouldn't run out and buy them, but I wouldn't run out and short them aggressively either, unless you're a shorter-term trader who's really trading on the on the 1-minute time frame. You stay short. You lean into it for a day trade, and then you kind of cover up some of that position as the day ends. The financials looked like they were going to break some resistance here early this morning, and they got above that 1655 level, but they didn't hold. They came in very quickly here. So if you were long right in here, this is why we look at it and say, where does our stop go? Worst case stop, I think, for a new trade today should have been about 1635, 1640, or breaking that 5-day moving average right in here. I think that should have been your worst case stop, and it sucks to lose, but if you were looking at even a new position and saying, I want to get out if the market makes a lower high and a lower low, breaks the morning low below the declining VWAP, there's really not a lot of reason to take much risk, especially in new positions that you initiate. So we've got a bigger level here of 1620. If 1620 fails to hold, then we have the possibility that this market sells off a little bit, probably down to the next bigger level that should be important, which was the prior resistance in December, which had become support earlier this month and year, down at $16 a share. If that fails to hold, then we would probably look for a test of the 50-day moving average. Gold got a bounce today, and I think it was I forgot who. I'd seen a blog post. Somebody had pointed out, that basically any time it sells off a lot and breaks important support is when we typically get a bounce, and that was a good observation. And we got a bounce in here today, up to the declining 10-day moving average. I think that gold still needs time to settle in before you would consider it a possible, longer-term buying and holding type of opportunity in here. Let's take a look at those stocks that I had posted to Alpha Trends this morning as potential candidates. One was BLTI. It's still in a nice uptrend. And I talked about getting long above resistance. So we want momentum in our trade before we get involved. We want to see it break resistance and then make a pattern of higher highs and higher lows. It didn't do that today, so there was no reason to be a purchaser of BLTI. It shouldn't have cost you any money. We want to observe, and what we want to do is we want to look for new setups in the market. We, of course, will have to manage our open positions just as aggressively, but when it comes to purchasing a new stock, we want to we want to anticipate as it's holding support, making those higher lows at the 5-day moving average, and then wait for price confirmation that we get above that resistance before we participate, and then set our stop. Well, had we gotten involved, our stop would have been maybe down near 295 or this level if that was, the level that you chose personally. But there shouldn't have been a purchase in this stock. There shouldn't have been a purchase in CELL. I'd mentioned maybe above 940-ish as a cheap buy, but the real level was $9.51 that the stock had to break in order for the upward momentum to continue on that larger time frame, that is the weekly time frame. And obviously, this stock, it still looks good on a weekly time frame, but there's no reason to be in it with a new position in the near term. Today it was weak right off the open. So we had, this high, we had a lower high yesterday afternoon, and then we hit a lower low. There's no reason the stock needs to reset up. It's not ready to be purchased here. The other long that we had considered was Research in Motion. Research in Motion, as it was holding this rising 20-day moving average, and I said, or wrote that you don't want to buy at a rising 20-day moving average or any other moving average. That's our cue to take a closer look at the stock on a shorter term time frame. So we looked at, the 5-day moving average, and we looked at this little pattern here where we had, what appeared to be setting up was the possibility of an inverted head and shoulders pattern and some horizontal resistance right here at about this 6250 level. So had it broken, here's what we would have been looking for. Maybe a run up to 6250 and then a push higher and even a pullback, and then maybe Research in Motion could have moved higher. But instead what we had was weakness. We saw a lower low, and now Research in Motion is not, did not set up. The 5-day moving average started to flatten out, and we would have looked for what we would have liked to have seen again here was a break of this pattern of these lower highs and lower lows. So we saw the we saw a higher low, but we didn't see a confirming higher high above 6250. So again, there was no reason to get involved in Research in Motion on the long side today. So none of those long ideas should have cost you a penny. If we flick to the other side and say, let's take a look at the stocks that were mentioned as possible short candidates, MBT on a weekly time frame, it's in this late stage 3, looking like it's probably going to decline down towards the 17 level is what it looks like to me. On the daily time frame, we're in a confirmed downtrend below a declining 10, 20, and 50-day moving average. And on that shorter term time frame, as we broke through support in here today, this was a decent level to sell the stock short with a stop. I think we had first mentioned, I don't have my notes in front of me, of a stop up there. But then, once it makes that lower low, you want to drop your stop to what would violate the definition of this downtrend, which would be to this point. So, theoretically, you should have, and I wasn't there to do it, so I can't say what I would have done or what anyone else did, but hopefully maybe you got short in here and covered part of it profitably, and maybe have your stop up here or at break even at this point. But MBT, it's a weak stock, and it's an easier target than trying to, you can say, well, you could have made money shorting Apple today, and you could have, but news and surprises tend to follow the direction of the trend, and the market makes it a little bit easier when we're looking at a stock like Discovery Channel, that Discovery, this longer term, it's had this massive uptrend. It broke that trend line. We see this lower high and the lower low on the weekly time frame, and when we drill down to a daily time frame, we can see that support at that $40 level had become resistance, also near the declining 20-day moving average. We've got a 10 below a 20 below a 50, and the stock's been having trouble with this 200-day moving average right in here as well. So when this stock breaks some support in here today, I was talking about, this bigger level that if it broke the lows for the week, so it might not have been the best short candidate, truthfully. I mean, had you shorted it maybe early on, as it failed at daily pivot and broke below the morning lows, perhaps that was a better way to get involved. But that's the type of on your feet analysis you have to do when the market is open. No one can prepare fully for every little scenario the market's going to give you. We have to anticipate all potential outcomes, determine what's most likely, and then go with the information that we're getting, in the moment. The other one that we looked at as a potential short candidate was Velasys Communications, VCI. It's showing these lower highs on the weekly time frame. We're getting all these moving averages heading lower. A move down towards 27.5 wouldn't surprise me at all. In here on the daily time frame, we can see we've got this 10 and 20-day moving average. The stock just looks like it's got this bigger level, really probably at 30 bucks. Well, let's see if I can draw that a little bit straighter. Probably at about 30 bucks a share. That here's where you're looking at the pressure building and the stock holding at that the conjuncture of the 20 and 50-day moving average. We see that volume had increased on the way down and then diminished as it turned sideways. So this one's not really broken yet. Could still offer some good possibility to the downside. I think this was the one that I had mentioned was maybe a little bit choppier. But what I think I liked about this one was that it seemed like it could put a stop fairly close by, just above one of these lower highs on the 10-minute time frame. Either way, it's still a choppy stock and really wouldn't have produced good results today. But the setup is still good looking for next week and maybe the next couple weeks. Anyways, that's just a quick wrap up, and I hope everyone had a good day. I'll talk to you next week. Thank you.